Hello and welcome to another Market Chameleon tutorial. Today we're talking about what happens if the stock goes down and down and down. You can still make money. We are gonna focus on best downside cushion for a debit call spread. This is the tutorial for today. We're gonna go over a debit call spread screener from Market Chameleon. We're gonna have a bullish market outlook, but the Fed is talking tomorrow and I want to find trade opportunities for high market cap stocks that even if the stock goes down, I don't know, 10% in the next 30 days, I still want to not collect income. In this case, I want to pay less and I want to make more. Okay, because this is a debit spread, we are paying money, but we're gonna find cheap opportunities to pay less. And even if the stock goes down a lot, you're still gonna make money. This is the filter. And before we even get to it, let's read a quick disclaimer. And know that this is not a financial advice. I'm not a financial advisor. This is for entertainment and educational purposes only. And my name is Ziv, also known as Finance After 40. Now, with that being said, let's go back to Market Chameleon. Of course, 7 days link below if you're not a member just yet. We are focusing, we've done a couple of videos about debit call spread screener. In order to get to this page, you're gonna click on screeners right here and you're gonna click here, bull call spreads, okay? But I'm not doing general stuff. I want to go specific, super specific. So I'm going to pick from Market Chameleon pre-filters this one, best downside cushion plus 10% edge. What does it mean? That even if the stock goes down, I'm not talking about like a $100 million stock. I'm talking about the trillions, the Apples, the NVDA and all that. Best downside cushion plus 10% edge. That means that you can make money even if the stock goes down. That's the key. And the edge, the 10% edge, means for this specific screener that you pay less for the debit spread compared to what you should have paid based on history. So click here, best downside cushion. And instead of 1,000 pages, we got, let's see how many pages. We got 3 pages. 3 pages that are filtered by market cap. I don't want to go by market cap. I'm gonna go by downside cushion. So let's just see what we got. But of course, you know, for the new people out there, I'm gonna go real quick, explain debit call spread. Okay, let's do it real quick. Debit call spread involves you buy a call option for expiration for a particular underline at one strike, and you sell the same number of call options for the same expiration and higher strike because you're selling option at a lower premium than you are buying. That strategy requires a net outlay of premium, which is a debit. What does it mean? Let's say the stock is $100. You buy the 105 calls and you sell the 110 calls. That's what you do. Okay, that's the strategy. And your prediction is that basically the stock will go higher and above 110 is your max profit. So let's see what we got. Even if you're wrong, I want to filter this. Even if you're wrong, this is the downside cushion. So let's see what we got. We had expiration next 30 days, max of the spread up to 5, that's fine, ex dividend after. Now we got ourselves theoretical edge over 10%. This is where you pay less than what you should have paid based on history. Over 70% theoretical win rate, and show best by downside cushion by symbol. Okay, best by downside cushion by symbol, which is basically this one, best by downside cushion. We got results, Apple, NVDA, Amazon, all that stuff, but I want to go here. Okay, and it says here, if you're gonna read best by downside cushion, let's click on this twice to see the highest results. Okay, let's click twice. There we go. 1 minute. There we go. And before we even go, let's read. It says if the current stock price is above the break-even price, okay, This is the percent change in stock price that exists as a cushion until the stock price reaches the break even. So let's see what we got. Intel, I want you. Okay, let's find something that is big. Yes, we got Intel, we got stuff that we do know those, but I'm looking for, and as you see, for example, the higher the downside cushion, you're not gonna find Apple in here. Apple, for example. Here, we got NVDA. Let's see what we got for NVDA. For this example, you see 3.7% downside cushion. So let's see the trade. Price today, 116.94. Okay. So this is the opposite of what I just mentioned with the 100 and 105 and 110, because now you are still winning if the downside cushion is up, and also 50% return on your money. That's interesting. Let's see this trade. NVIDIA almost 117. I'm gonna go over this in a minute, but it tells you right here. It tells you what to do. It tells you to buy the 110, correct? Yeah, buy strike, sell strike. You buy the 110 calls, you sell the 114 calls. This is like the opposite of a put credit spread for October 11. Okay. And your max profit right here, max profit, max gain, $135. And your max loss is 265 if NVIDIA goes below 110, okay? But you are basically paying, this is the beauty of Market Chameleon, it doesn't tell you where the stock is gonna go, but it tells you that based on history, you should have paid for this debit call spread almost $300, $293. And now you're paying $265. You have 73% chance of a win rate, over 10% edge, and basically you have 3.7% down in NVIDIA. Of course, can happen, volatility and all that, but it is NVIDIA. I don't know, but as long, look at this. If the stock stays the same, this is a great number as well. Right? Percentage return if the stock is flat. 50%, 50.9%, that is awesome. There's a lot of volatility in NVIDIA. NVIDIA stays 116, 117. Okay, you are making 50, almost 51% on your money in like 3 weeks. You have 3.7% downside cushion to go from 117 to 114 to still make a profit. I assume this is like 3.7 just to break even, which is okay, not bad. Now if and you can go all the way. Now MU, there was a lot of volatility, so that's one option. Let's see MU just for the example, then we're gonna filter by market cap. So this one, 97 billion. Okay, what's the price today? We got ourselves price of 88, and look at this price 88, and it tells you to basically buy the 73, sell the 78. We are at 88. Okay, you're already $10 in the money. There is earnings September 25, so after AMC, after market close. So maybe if you are taking this trade, not a financial advice, close the trade before the earning, and something like that. 99% historical win rate. That is insane. Well, look at this. You are basically paying $450 compared to $500. Collect $50, you know, it's a pocket change. Maybe do a couple of contracts instead of one. But this is the beautiful thing. Downside cushion 12.4%, meaning that MU needs to drop more than 12% in the next 10 days. Yes, there is earnings, but until earning, maybe a little decay will come. More than 12% downside cushion for you to just break even. Absolutely crazy. Now I want to filter, and this is just something that I saw here. Let's filter by market cap and see, other than the NVIDIA ones, if we got ourselves some Apples and all that stuff. I assume it's not a lot of downside cushion, but Apple went down yesterday to 215. So here we are. Let's see, 215, Apple's number one. And it tells you basically buy the 210, sell the 215. We are at 215.76, October 4th, and collect $160 if Apple is above 215. And your downside cushion is 1.1% if Apple, so you're bullish on Apple in this case. NVIDIA, we did this. This is a different trade. This is a different trade for NVIDIA. Interesting. So we got ourselves 4.4% downside cushion on NVIDIA. Stock stays the same, 49% return on your money. There's so much premium in the NVIDIA calls and puts, because retail is just buying non-stop. But if you think differently and if you sell stocks, that's a different story. So we got NVIDIA, let's see again, 116, and it tells you buy the 108 calls, sell the 113 calls. October 11, collect $165 as max profit, not now. Max profit at the end, and your max risk is 335, but as long as NVIDIA stays above 113, yeah, by the expiration, yeah, you collect your money. You got 4.4% downside cushion, 49% yield on your money. This is absolutely crazy. We got Meta. I'm starting to love Meta. Starting yesterday with the trade with you saw trade ideas. If you're not, check my videos. Price 533. Look at this. What I found here: 94.7% win rate. I think it's the trade from yesterday, just reverse, because we did a put credit spread. This one tells you buy the 510, sell the 515. October 11. Yeah, almost 4%, 3.7% return on your money. No, 3.7% downside cushion, 19% return on your money, as long as Meta stays above 515. Basically, and we got Walmart in here, 0.5%, and we got SPY, 1%. This is interesting. This is for, look at the SPY, for tomorrow. 1 DTE. Super risky, but I'm not a financial advisor. Look at this. 563, it tells you buy the 553, sell the 558. Okay, your max profit is $74, as long as the SPY by tomorrow stays above 558. We are at all-time high now. I think it's a little less, but we'll see. It's 563. You still have downside cushion, so SPY needs to go down by over 1% in the next one trading day. If it doesn't, you make 17% in 24 hours return on your money. Your max loss is 425 if SPY goes a lot down below 553. Can it happen? Sure, but who knows? Same for the QQQ right here. Price 473. Also for tomorrow, buy the 465, sell the 470. 1% downside cushion, 27% return on your money if the stock doesn't go anywhere, and so many other options. Feel free to check them all out. Market Chameleon 7 days trial, link below. I'll see you next time.